Now, this article is very, very disturbing. Okay. SVB executives sold 84 million in stock over the past 2 years, stoking outrage over insider trading plans. Now, listen to this situation. Silicon Valley Bank CEO Greg Becker sold nearly 30 million of stock over the past 2 years, raising new questions over insider stock sales. Becker sold $3.6 million worth of shares on February 27th, just days before the bank disclosed a large loss that triggered its stock slide and collapse. The sale capped 2 years of stock sales by Becker that totaled $29.5 million, according to data from Smart Insider. He sold at prices ranging from $287 a share to $598 a share. Now, this is very, very crazy because this bank was just on a call saying that it had to shore up some deposits. But this individual, the CEO of the entire bank, sold $3.6 million worth of shares on February 27th before all this stuff happened. Okay. Something in the milk is not clean. Okay. Also, Becker also purchased options at lower exercise prices as part of the many sales and maintained his equity ownership stake. Other executives at SVB, including Chief Marketing Officer Michelle Draper, Chief Financial Officer Daniel Beck, and Chief Operating Officer Philip Cox, also sold millions of dollars worth of shares since 2021. Like I said, altogether, SVB executives and directors cashed out of 84 million worth of stock over the past 2 years, according to Smart Insider. The sales have sparked criticism of SVB's management, as well as the broader phenomenon of insider stock sales before major declines. Representative Ro Khanna, a Democrat from California, where the tech-focused bank was based, said Becker should return the money to depositors. I have said that there should be a clawback for that money, Khanna tweeted Monday. Whatever his motives, and we should find out, that 3.6 million should go to depositors. And I can't be mad at what he's saying, to be quite honest. Becker's share sales were part of a scheduled program known as 10b5-1 plan that was filed on January 26th, according to SEC filings. The 10b5-1 plans allows insiders to schedule stock sales ahead of time to reduce concerns over trading on insider information. Yet, SEC Chairman Gary Gensler has said the plans are rife with abuse, with insiders selling right after filing the plans, creating overlap or multiple plans, and/or by creating one-off scheduled sales. The SEC created rules which took effect February 27th and apply to plans filed April 1st. The rules include a more disclosure, transparency, and timelines for scheduled sales. It imposes a 90-day cooling off period between the filing date and the first sale. Under the new rules, Becker's sales, which came just 1 month after he filed, would not be allowed. I'm going to say it again. Under the new rules, the $3.6 million sale, which came just 1 month after he filed, would not have been allowed. That's very, very important. The SEC actually sent a strong message to inside sellers last month when it charged Taryn Pizer, executive chairman of OnTrack, with insider trading for selling more than $20 million of the company's stock before it plunged 44%. The SEC complaint alleges that Pizer knew about the potential loss of the company's largest customer when he established the selling plan in May 2021. Becker and other executives at SVB have also come under criticism for receiving their annual bonuses on Friday, a few hours before regulators shuttered the bank. On Sunday, the U.S. government struck a deal to backstop depositors at SVB and crypto-friendly Signature Bank. Now, I'm telling you, this goes into the narrative of why I feel that SVB is just incompetent. The bank could not have good technological makeup. Like, the technology from the bank was trash. Okay. If we look at management didn't really care. They were all about making their money. So much so to where the The CEO made a $3.6 million sale days before he made that announcement to the shareholders of SVB, and he even collected his own annual bonus. Okay, even collected his own annual bonus along with other executives. So I'm telling you, SVB, this situation does not look good. And to me personally, this wasn't a strong bank to begin with. They were making poor decisions. Okay, they were making poor decisions, and the management at the top of this, okay, was just poor management, in my particular opinion. Now, full disclosure, I just heard about Silicon Valley Bank last week when everybody else did. But based off of the information that I have gathered and what I have seen, everything that is going on with SVB is just not a good look.